You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm Kerry Lutz. Well, it's Monday, June 13th. It might as well be Friday the 13th. And you might as well be a Knights Templar if you are in the market now, because you are getting slaughtered, and it's not by the King of England who's head beat, it's by Uncle Sam. Either way, the end result is the same. Well, what else do you do? Where do you go? Where do you put your money? Is real estate a good idea, or is it the baby going to be thrown out with the bathwater? Toni Patillo, you are with us now. Toni, you have such an interesting, compelling life story, literally going from, as you like to put, intellectual property to real property. I like to say you went from Motown to Property Town. Either way, really, it kind of illustrates the economy nowadays. Many of you out there believe that true wealth comes from intellectual property. Others of you, like myself, believe that all wealth comes from the earth, and therefore, where do we make peace between the two here, Toni? What's your key? What's your take on things? What's going on now?
You know, we always have fluctuations in our market. And the one thing that I feel is a constant is real property. It's tangible. It's not going anywhere. It may fluctuate in price depending upon how and where it's located. Location. But most importantly is you just can't beat real estate, We got a lot of different things happening with digital currency and NFTs and all these different types of digital currencies. And it's just a new wave, but we're not quite certain about its long-term impact. And so I don't know. I've been a real estate girl for forever. So.
Yeah, well, I always say that NFT is not worth the paper it's not printed on until somebody shows me otherwise. Mm-hmm. And I'll just take a one-way ticket to the metaverse and I'll talk to you later, Toni. Mm-hmm. Hey, if you live in the metaverse, then NFTs probably make a lot of sense.
Yeah.
But, the one thing I've learned is there's a market for everything.
Yeah.
And like you said, the markets, in the words of the immortal Louis Rukeyser, who used to host Wall Street Week on PBS, he said markets will tend to fluctuate. And if you're leveraged, then you get washed out in the market. If you're a cash owner, either you sell before the market gets wiped out or you take your lumps and then wait for it to recover. Mm-hmm. Real estate is a different asset class, but you got to think here, Toni, that in face of the record gains that we've seen in real estate prices over the past 3 years, going back to the pandemic right after, we've seen unsustainable high prices. We've seen rents go up, perhaps unsustainably.
Yeah.
Mortgage rates are now going up. There's going to be carnage in the real estate sector, isn't there?
Mm-hmm. Yeah. The commercial sector is a different animal than the residential sector. However, it's so crazy what we're seeing with the prices. And I've seen this before. There was a point, I believe in 2005, our market was up. Things were booming. Anybody could get a loan. And then, of course, because of the way the finance vehicle was working, things weren't sustainable. And so we hit a bump. A little different environment today because it isn't so easy to get the loans. But, they are requiring more down payment, more skin in the game. But, I remember when the interest rates were at 18%. You probably remember that back in the day.
Yeah, but I remember it when they were double digit, but yeah.
Exactly. So the interest rates are high and the prices were lower. But either way you look at it, now the prices are higher and the interest, it's constant movement. It's constant movement. But at the end of the day, with real estate, you still have the tangible asset. It's still there.
And a tangible mortgage, right?
The tangible mortgage, exactly.
Yeah. So I mean, do you look for OPM and try to invest as little of your own cash as possible? And then if the thing goes down the drain, well, you're out a paper asset, a paper profit, or do you up your equity and then fight to hold on through the bad times? That's really my question for you, Toni.
I really think that you fight. I mean, you build equity and you hold on. It is a long-term game. And it all depends on your lifestyle and what's going on in your life. And some people are in transition. If you're 50 plus, you may be having a different type of experience in life. And especially if you're a boomer, we're downsizing. We're making moves to have less is more, if you would. Less is more. So
I didn't think you were a boomer here. I thought you were too young to be a boomer, honestly, Toni.
Come on, Kerry.
Hey, well, I'm a boomer too, but always still looking for new things. So at this particular time in the market, blood in the streets, certainly values are going to come down. This is the time to wait, accumulate cash, go bargain hunting, or do you just stay the course? If you're just getting into real estate investing, I guess is the question. Do you stay the course, or do you hold on, wait for the shakeout, because there's going to be a shakeout?
Yeah.
And then go in? What do you do?
I'm a firm believer that, you can get in the game. People, and historically, what I've witnessed in the time that I've been in real estate is that everybody is waiting. A lot of people are waiting for the market to, people will say, Toni, is this a good time to buy, or should I wait until the prices come down? So far, I haven't seen any coming down. I mean, even me personally, I bought a building in 2014 for $340,000. It was four units. And here we are today. It's worth $1,350,000. But the key is that it's all about location, and it's all about, where you're invested in, how much equity you have in the property. I have not seen real property have significant drops, let's put it like that, in value. I've seen the prices adjust. The rental market is at an all-time high right now. The real estate market, obviously, the values are up. Even as an adjustment, even as the interest rates are up, we still have, there's still, you just don't see them dropping, like the price values are dropping in a way. Now, if you're talking about inland, or if you're talking about other areas in the nation, yes, you're going to see some different things kind of adjust themselves. But, whenever someone asks me if I should wait until the prices drop, I just cringe, because I haven't seen them drop like that,
Well, they did go down in 08 and 09.
Right, for sure.
2012. But, will we have another foreclosure crisis? We can't really tell at this point.
Right.
It seems like society has made a decision they don't want foreclosures as a rule, and they're limited. But also, look, we've had a situation of literally, I'd say 7-8 years of rising property values appreciation. So that bails out a lot of stupid people who should have never bought what they bought or paid too much for it. And also, and that allows people who are underwater in their homes to sell them off, if not at a profit, a short sale, whatever, to actually get out of there. So as a result, those properties, which in a worse time would have gone into foreclosure, get bailed out effectively by appreciation. Inflation is a wonderful thing. But so let's talk about inflation. Because obviously any real estate investor worth their salt, which you clearly are, Toni, has to be an expert in inflation, right?
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project, with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, I mean, you've got to be conscious of what the cost factor is going to be, what your threshold is going to be. This is a very interesting time for anybody who's looking to flip. Okay, it's a very tough market to be in a flip space. You got to be super experienced, number one. Number two, you really have to have control of your construction teams and the dollars that you're spending to enhance the property. It's got to be well thought out. But you have a lot of different dynamics that are happening with the inventory of supplies and things that you are using. Everything is backed up. Things are not coming in on time. So, you're paying, you've got an investor that's paying hard money, using hard money to flip. So there's a cost of money that you've got to take into consideration. And then that gets counteracted with what it's going to take for you to put this thing back together and the accessibility to those materials. That's where we're really finding, we have an issue with labor and we have an issue with materials today. So that can have a huge impact on your bottom line.
Yeah, no doubt. So you got to take into account all these factors, the inflation, but the inflation also, if you're financing a property, inflation's arguably close to double-digit rates, if not above. Yeah. Could be as high as 20%. Even still, your mortgage at 5%, 6% even, you're still getting a inflation return on your investment of 14% because you're getting to borrow money cheaper than the money is losing its value. Mm-hmm. And down the road, that's going to affect your appreciation as well, right?
That's right. Yeah. I don't know that it balances out, but it all has a factor for sure.
Yeah. So the question is, like you say, don't wait, go now. But
I think it's about getting in the real estate game. For those who have never been in real estate and they want to get into real estate, the objective, it's a long-term game. This is not, if you're thinking about getting into real estate to flip a property, I would not recommend that today. There's too many risks.
So cash flow, you think there's still good opportunities for cash flow, even with higher mortgage rates?
On investment properties, like income properties?
Yeah.
Yeah, but you got to look hard for that. I mean, if you're in an environment like we are here in Southern California, where you have rent control, okay? Right. You really have to take those things into consideration because you may not be able to charge a market rate on rental income in an environment where it's restrictive. And a lot of the laws are very tenant friendly. So, it's very interesting looking at the multifamily industry today, because especially in areas where you've got such restrictions and it's so tenant friendly. For someone who owns a multifamily selling today, that's a question whether or not you're able to actually sell and really take advantage of the higher market today. It's a little different because now you've got tenants to take into consideration who you can't necessarily evict. You can't raise the rent on them,
Yeah, what's a landlord to do here, Tom?
Yeah.
It's one of my friends who's a real estate expert, made a boatload of money, says he looks for landlord-friendly states.
Yep.
I think there's probably less and less of them all the time after the pandemic, but still some ones where you can quickly evict non-paying tenants or tenants who aren't living by the terms of the lease. And those are often down south. and, Midwest, upper Midwest to some extent. Some places like New York and New Jersey, it varies from town to town. Whoever the judge is at the municipal court, that determines whether they're landlord friendly or not.
Right.
But in places like New York City, let's face it, LA, they think that the cure to shortages is by restricting the landlord's potential profit. And in reality, that's exactly the opposite, right? It cuts down supply. It makes landlords much less willing to invest in your property, and really worsens the situation for everyone. But hey, this isn't a show about free market economics. It really is, but not the point of our interview. But I understand your point. So in terms of markets, in terms of types of properties, where do you encourage your followers to invest?
Ooh, that's a loaded question.
I'm good.
One has to really do their homework. You really have to study this very specific market, the location, the rules, the regulations, all of those things have to be taken into consideration. So, there's a catch-22. You can invest in a lower end market, but those are typically the ones that go down the furthest. And, they're the ones that are hit the hardest. So, you can go out to Palmdale if you would, and you can afford something out there, but at the end of the day, they'll be the first ones to drop when the market takes a bump.
I hear Detroit's got some real bargains,
I bet.
We had that anomaly in Detroit several years back where properties sold more without a house on them than with a house on them. So the house is actually the negative equity. I never saw that before. So I guess, all right. So people want to find out more about you, Toni, connect with you on the web, follow what you're doing. How do you do that?
I can be reached through social media, all social media. I have a site that's called everythingtonipatillo.com.
All right.
Everything.
That's everything. Huh?
And that's everything. That's all my social media. That's my real estate website. That's my mindset. I do a lot of mindset coaching, and everything is in that site. It's a good overview.
You will find, if you're at financialsurvivalnetwork.com, there's a link right to Toni's website. And you can always shoot me an email, kl@kerrylutz.com, and we'll get you an answer from Toni. And don't forget to subscribe for your free newsletter, financialsurvivalnetwork.com. Toni, been a complete pleasure having you on the show. We will definitely have you on again. Good luck, and we'll talk to you soon.
Thank you. Thank you for having me. It was a pleasure.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.